Okay, in this video what I'll be looking to do is to run through a number of lease modifications. I'll be looking at a lease where the lease payments have changed either due to indexation or CPI increases. I'll be looking at a lease where the lease term has extended. I'll be also looking at a lease where the lease term has reduced. I'll also be looking at where the scope of a lease has changed. Now, with the scope of the lease changing, I'll be looking at two alternatives there. One is where the additional space is leased at market value, and one I'll be looking at additional space which is leased at off market value. In addition to that, I'll be looking at a lease which is denominated in foreign currency. And to end it off with, I'll be looking at a lease where there has been a combination of changes, like for example the lease term has changed, the lease installment has changed, and the lease incremental borrowing rate has changed. So I will look to cover off where there is a combination of changes to one particular lease at a particular point in time. Alright, so let's get started. And so I'm going to just start up the program now. Sorry, that's the grouping. Let's start up the leases here. And now I've put in a couple of leases in here. So for example, for the first one where there's been an indexation change, let's just assume it's on this office building. So after the first year 2019, so we will assume a change has happened before at the next lease payment time, where there has been maybe a 5% increase in the lease, for example. So it is important that the lease period is the modification falls on one of the lease payment dates. So I'm going to say 1st of 2020, so it's the very next year. So we're doing an increment. The lease term hasn't changed, so 5, and the lease interest or the incremental borrowing rate, I'm going to assume it's been the same as well the next following year. So I'll first record the change for the modification. Now, so for the balance 4 years, instead of the lease being 20,000, it has moved up to 22,000. So I'll just call up the populating form, and I would say 22,000 for the balance period, and I'll apply that. So with that, you have the lease modification. Now the lease term, the lease payments have now increased to 22,000. You also get the adjustment that is required to be recorded in the lease and the right of use asset, which also changes the depreciation. If you look at the first entry, it'll show you when the lease was created, and that the first installment, since it was prepaid, was basically straight away going against the cash, and the lease liability would be less the initial payment because it was not borrowed. So with that, so that's the initial change for maybe a CPI or indexation increase to the installments. The next one I'm going to look at, so I'll just pick another one where the lease term is to be reduced. So for example, if I say we have an office block which is for 10 years, so it was taken up on June 2020. So we'll assume that on year 4, that is in June 2023. So June 2023, we've decided to extend this lease to say 12 years. So we've taken a 2-year option to increase it at that point in time. And again, we're going to assume that the incremental borrowing rate has not changed. So I'm going to leave it at 6%. So I will now register the change. And so the initial lease, we will assume that the initial lease for this block was at say This is an annual payment, so we'll assume for the block it is say 50,000 a year for the office block. So I'll apply that. So that was the initial entry required to record the change, which gives you the initial entry. Then when it comes to the modification, since we have now increased it to 12 years, I'm still going to assume that the installment is still going to be 50,000 for the balance period, and I'm going to apply that. Okay, so with that we have the required adjustment for the increase in the lease term from 10 years to 12 years, and we also have the initial entry which is required to bring in the asset to account. I'm also now I will use the same asset to just demonstrate a reduction in the lease rather than an increase. So assume on the year 2023 we decided that we're actually not going to continue with the lease to 10 years and we're going to reduce it to 8 years. So just change it to 8 years, and I'll just register that. It'll just give me a warning to say that we are reducing it and some of the cash flows will be taken out. So you will agree to that because we want to reduce it to 8 years. Taking it out, and you can see the lease is now 8 years and it's going at 50. And if you look at the entry, you can see that we are making a loss on lease term decrease, which goes to the P&L in order to decrease that lease term. So that is just increasing and reducing a lease term. The next one I want to look at is maybe increasing the scope of the lease. Now, for example, let me just pick an asset for the increase in the scope. So, for example, we will assume it is this machinery, this plant and equipment. Now, we got this initial entry for the plant and equipment, which is for 15,000. Now, if the, say for example, if you're getting a new an extension or extending the capacity of this machine, and we're doing it at market rate at a particular point in time, it would be a new lease for that you need to create. It is a new lease, it is at market rate. However, if you are getting an extension of this asset, but it's going to be at an off market rate, so suppose, say this has the 3 components which is at 5,000 each, and you're going to get a 4th component to this machine, but you'll only need to pay 3,000 for the new component. So you're getting that reduction from market rate because of the fact that you are already leasing 3 components from this supplier. So in that instance, this would be a modification to this particular lease. So, but term is going to be the same, but we have just requested an additional component. So what's going to happen here is you would say, say this is to take place. Now this is a yearly lease as well. So say we are going to do this on in March 2021. So we put March 2021. So it's, you need to remember that the changes in leases must take place on one of the lease periods for it to be able to be calculated by the system, because if it's not taking place on one of the lease periods, it means it's either an invalid entry, or it's a new lease, or it cannot be combined. It's something that is not correct in terms of the data entry. So I'm going to assume it's the same term, and we'll also assume that the incremental borrowing rate has changed to 5% for this particular entry. So it's 2 changes. One is we're getting an additional component to this lease, and we're also reassessing the lease, so therefore the incremental borrowing rate has now come down. So that's the previous amount which we were paying. So since we're going to pay 3,000 more for this additional component, it's going to go up to 18,000. So I'm going to put in the 18,000 there for the fourth component of this asset, and I'm applying that, and with that you will be able to see that the lease asset has now increased as a result of that change. Okay, so that has been the primary impact on this particular lease. So that is changing the scope of a lease. Okay. Then I'm going to look at where another lease where it is denominated in foreign currency. So for example, we have a factory which is for a 10-year period, and we are renting it out or leasing it out for 120 a year now, and that is based on the foreign currency rate at the time of getting into the lease. So on the next year in January, when we were reassessing it, so it was in January again, so January we're picking one of the installments in January 2021. We're still going to be leasing it for 10 years, and the interest rate hasn't changed, so I'm going to keep that at 6%, but the foreign currency has changed. So for example, I'm just first going to populate it. So before I make the indicate that it's a foreign currency change, I'm going to increase this. So we'll assume that the lease installments increase from 120,000 to let's say 25,000 due to the fluctuation in the exchange rate. So it has increased by 5,000. So in order to indicate that this is a foreign currency gain or loss, as you can see, it's going to be a loss because we're going to have to pay more. It currently doesn't treat it as a foreign currency gain or loss, it just treats it as an increase in the lease payments being made. So in order to indicate that this is a foreign currency gain or loss, you have to basically first enter in, say, one of the installments which you have paid. So it's we paid 120,000 previously, and the FX impact due to foreign currency change is, say, 5,000. All right, so this works out the percentage that you need to take up. So we apply that, and you can see there is a percentage on which it's the foreign currency. So now we will record that adjustment by just clicking out of the line so that it is recorded, and you will be able to see that there is a foreign currency gain or loss recorded here. There is a small rounding which comes out from that, but this is all related to the foreign currencies, but it is a rounding error. You could potentially include it into the lease and the foreign currency if that's the only adjustment that has gone through. Alright, so that is the treatment of a foreign currency. I think I sort of covered a combination of changes, but I will just pick another asset just to show you combination of changes. Say if I pick, have we done a modification? We've done a modification there, but let me see another asset. We haven't modified. I think we modified all of the assets in some way. So maybe I'll just pick the factory again to do a combination of changes. So we had a foreign currency change here. Assume in addition to the foreign currency change of 5,000, we also had say it increased to 130,000 in terms of the installment. We had increased the rate as well as the foreign currency impact. All right, so in that case you'll have actually increase in the lease liability and the asset in addition to the foreign currency impact, and also we may have had, maybe it could be an interest also changed to maybe say it dropped to 4%, for example, at the same time, and you just click out on that to register it. So you'll also see the impact on the right of use asset due to the change in interest rate here. Okay, so you can see the interest rate has had an impact as well on the asset and its the lease liability. Okay, here I'm going to show you one of the lease modifications that I failed to mention at the start of the video, and that is to do with the splitting of a lease into its components, as one of the components are going to be impacted with the modification. So for this example, what I've done is I have created a lease here where we are leasing an office block here in Adelaide for 4 years, which has 4 floors, and we are leasing it for 85,000. The first floor is a slightly larger floor space, so we pay 25,000 for the first floor, and the other 3 floors, which is floors 1 to 3, we pay 20,000 each for each of the floors. So the first thing we're going to need to do is to split out the first floor before we can modify this, because we are going to give up the first floor. So the lease started in January 2020, and we intend to keep the first floor for 4 years of the lease, which means it will end in January 2023, and we're going to terminate the first floor's lease on that date, while the floors 1 to 3 we are going to continue for the 8-year period. So the first thing you're going to need to do is to split the lease. So the first thing I need to do is to take out the first floor from this lease. So to do that, what I'm going to do is I'm going to reduce the lease payments down here to 60,000, and I'm going to apply that. I'm also going to just mention that it is floors 1 to 3. It no longer includes, sorry, floors 2 to 4 rather. 2 to 4, it no longer includes the first floor. And with that, this area is now correct in terms of the leases, because floors 2 to 4 are not impacted by the modification or remain unimpacted even after the modification. It's only the first floor that is going to be impacted. So what I've already also gone and done is, let me just take a quick copy of the lease terms, because the lease terms haven't changed. It is only that we're going to terminate the first I'm going to put this to the side. We're going to terminate the first floor lease after 4 years. So what I've also done here, just to save some time, is I've created for the office block in Adelaide, I've created the first floor. So I'm going to select that. So I just created the first floor, but I've not entered in any of the data. So you enter the same data as per the previous lease. So that's January 2020, and the lease term was for 8 years, and it was the incremental borrowing was 4%, and for the first floor we were paying 25,000. Now when you do this, and when we have created this lease like this way before the modification, the assets at the combination of the two assets and the liabilities will equal, or it must equal. Then you know that you have brought the two assets, but all you've done is split the asset. Now, as we are going to terminate this first floor in 4 years time rather than 8 years, rather than having the lease for 8 years, so we are currently in January 2020 in this example. So I'm assuming that we're at January 2021. So I'm going to, so that's the date of the decision for this change. So January 2021, and at that date we have decided that we're going to terminate the lease at 4 years, and at that assessment date, say the incremental borrowing has also increased to say 5%. So I'll bring that in, and with that I'll bring in the 25,000 back again for the period, because we are not having to pay more even though we're early terminating it. So I'm going to apply that. And so as you can see, this particular lease has been modified and reassessed, and the 3 floors above it remain untouched, which is it just remains the same. That lease is not impacted. It's only the first floor that got impacted. So that's how you would undertake a modification to split the lease. So that's it in terms of lease modification. I think this covers most, if not all, of the lease modifications that could come your way, and how you would deal with it using the software. Or maybe I would just cover one more lease modification here, and I think I covered this in the other one, which was an impairment. So let's assume on that particular day, due to all of these changes and the increments of the payments, that we also had an impairment, which is on January 2021. We also, the asset got impaired by say 100,000. So the asset dropped its value by 100,000, and I just click out of that, and you'll see that there is in addition to that, so there was an interest rate impact, there was a foreign currency impact, there was an installment increase, and there was an lease incentive. Sorry, you need to click in the impairment to indicate that it's an impairment. Just record that. Yeah, there's a recognition of asset impairment as well. Okay, likewise you could reverse an asset impairment by putting in the positive for that one in a subsequent year if the asset impairment was reversed. I think that probably covers a fair amount of lease modifications, and I hope you found this useful.